All right, welcome back to this week's market preview. So weekly we run through what happened last week and then we'll dive into what to expect in the coming week. All right, so last week I made mention of the fact that our volume trend actually turned bullish on this what was that? I'm confused. I think it was here. I think it was on this candle or this Wednesday. Yeah, FOMC. We actually turned bullish now, and I made mention of the fact that once our volume trend was now once our volume trend was now bullish, then we'll be looking for opportunities to buy the USD. But at the same time, our fractal OF was bearish, whereas swing short was inconclusive, right? So eventually, on swing shorts, this fractal low was formed. We came to take it out, right? But then by the time this day closed, we didn't, on this day, once it pushed down, we had multiple trades that basically we are going to hit break even, as I'll show you in a short while. And then on this day, it basically took off without us giving the timing that the trade happened. So if I go into so whenever any person who is part of the FXP, this is what you're going to get. So once I take my trades, I share screenshots of those trades, complete with my entry levels, stop loss, TP, everything. All right, you get to see it so that you could also follow, so that in case they're having something different, we could quickly analyze it and know where the issues are coming from. So we had our first trade on the 24th, which was a B5 trade. So usually our models have models from, we have C models, B models, and A models based on the win rate of a strategy based on the confluences that we have with each strategy. So the more confluences we have for a particular trade, the higher the model is likely to be. So each model is standalone by itself. It's a tradable system by itself. All the routes, SLTP, everything, what to look out for, and everything is complete in each model. So we had the 25th trade since we started this, and a B5 model, and of course, want to hit TP1, said it's risk-free, and then shortly after I went back to SL for break even. Then we got the next trade to the B5 trade, right? And then shortly after we got another trade, which was now our swing shots, our normal swing shots trade. So if you just see here, you see C1 model is fractal OF for swing shot just by itself, right? So since we already had a trade running on EU, I usually don't take a second trade except it's at a way better price. All right. So I'm showing you only then EU ETP1 and then back to SL again for break even. So that's the second trade that's coming back to break even. Then GU as well. GU hit after the horizon at SL, GU hit TP1. So that's a third trade back to break even. Then we got this other trade again on EU. After that one hit SL. Then this one went straight to SL. So that's basically that. And I don't want to share the community because there were some discussions we made that are strictly for those who have gone through the course. But I was telling them that I don't know why on this particular day, right? So this would have coincided with what we call our C4 model, where we have what we call an intraday fractal divergence. So once they took this fractal out, we were expecting this buy, but it didn't happen at the time. So everything we do all the models, there's time and price. There's a component called time and price where we are looking at things to happen within specific times of the day. So it didn't happen. I was like, what I don't understand is why they didn't come to pick us up before pushing up. But at the same time, so there's two relative equal lows. I was like, okay, maybe they are going to come back to run out these lows again. And sure enough, on Friday, they came back, pushed below, took out those lows, right? And then gave us a reason to buy. That was September 27, and we got in on this trade on GU. EU, the SL was too large on EU, and same day, TP1 hit on GU, and I think we currently have that trade still running. All right, so that was basically that for the week. At the moment, nothing has really changed. Our volume trend is still bullish. Volume trend is still bullish. Swing short is bearish, and fractal OF is bearish. But on Saturday, I had a Zoom with those in the swing short group where I explained the reason why I was actually being very bullish on or becoming bullish on the USD. Looked at volume both on dollar futures, looked at volume on euro futures as well. Looked at the fundamental reasons, which is usually reflected in the bond yield spreads, right? So all those things are pointing to stronger USD compared to at least the euro, at least, which, and of course, the dollar DXY, that's the futures, normally dollar index, is weighted like 60% or thereabouts against the euro. The euro comprises of about 60% of that index. So whatsoever thing is happening between the USD and the euro is very, very important to what is going to be happening on the dollar in general. So, but for now, our fractal OF remains bearish and swing short remains bearish as well. So what we'll be expecting is that when we get to our USD basket, we've seen this fractal high form. So we want price to push above it, take it out, and then give us a reason to sell on the lower time frames. So that's basically what we are going to be looking out for with regards to the fractal OF or swing short. Now, with regards to the volume models, or what to look at for volume models, it's really specific to those in the FX because there are so many things we do with our volume trend, because it's kind of tends to be more accurate than every other thing. So now if we look at the intraday, all right, let's start from the daily. So EU is still bullish on daily, right? So we are in this we've been in this kind of range in place, and it's basically, in my opinion, some people are building orders. So usually happens when people are building orders, when they are forming a kind of a base. So we'll see that happen here as well. It's when they are forming a base to make a push to another side. So you usually tend to see that happen. It's not just bother someone because over time you could do that by itself. What will be if we go to H4? All right, so price broke to the upside here, came, pushed up again, broke. All right, tried changing trend here, failed, pushed up, broke, tried going below this on Monday, and then failed again. So we're still bullish on H4. So H4 and daily are green. We are now be bullish bias on EU. So the way we trade, we don't trade what we think, we trade what our models say. So our intraday, based on our intraday fractal OF, what we'll be expecting is that, I think I need to go and work on this. That's been creating a whole lot of take it out so it doesn't create confusion. All right, so what we'll be expecting is that we'll expect price to come take out the Asian lows, right? Once price takes out the Asian lows, then we'll be going to our lower time frames, M15, M30, to look for reasons to buy, right? So it's really simple. For the weekly models, we want to see the fractal high taken out. So for our weekly models, we want to trade off the highs of the week, highs and lows of the week, depending on the direction we want to go to. But for intraday models, we are trading off the high and low of the day, right? So that is why we have it that way. So that is basically what we are to expect for the week. Now, we have NFP this week. So like I told them on Saturday when we had our Zoom, I expect that we are going to break out of this range. So since the FOMC decision, we've basically been locked in the range that was created by that decision, right? So price pushed down, and then the following day completed the move to the upside. We had basically been stuck in that range. Now I'm expecting that by the time NFP comes around, we are going to have reason to either break below, right? Break clearly below, or break above. One way or the other, we are going to have a resolution to uh, this logjam that we've sort of found ourselves in. So it's going to be an interesting week. If we look to the economic calendar, so today being, let's look at this week. Today being Tuesday. On Tuesday, we have a whole lot of PMIs coming out from everywhere. The Eurozone, UK, and US as well. So we are going to be having PMIs coming out. Those are really going to be markets moving. And then we have the job openings. People are still going to be keeping an eye on jobs because right now jobs is what is going to determine the direction of Fed cuts. Now, since the market's really pricing in 50 basis points, a 50 basis points cut for November, if the job component of the economy keeps doing well, people will have to unravel those bets, right? They'll have to take those bets down to lead to stronger USD. But if, on the other hand, jobs come out worse than expected, then what will usually happen is you have a situation where um, the probability of that 50 basis points cut begins to rise, and that is going to weigh on the USD because basically liquidity or money follows yields, right? Follows yields at the end of the day. All right, so let's just move ahead. It's not time for a fundamental bootcamp or something like that. All right, on Wednesday, we're going to have the unemployment rates coming out from the Eurozone and then the ADP employment change again from the US. And then on Thursday, another round of PMIs from the Eurozone and the US as well, services component of that. And then we are going to have the jobless claims. I think I've been emphasizing this for a couple of weeks. And then if you've been looking at your chart, you would have seen how potent those things have been in recent weeks. So everything that has to do with jobs is going to be critical going forward. So we have that on Thursday, and then on Friday we have the big one. We start with retail sales from the Eurozone, and then of course the non-farm payrolls, which is going to be coming out. So lots of data to work with for the week. So it's likely going to be a volatile week, whether it's going to be that kind of week where we just move up, then come down, then move up, then come down before we eventually get a breakout on Friday. It remains to be seen, but just know what you are doing in this current market. So that is going to be that for the week. So we are looking at a situation where we are trading both sides of the market, depending on what is offered to us. Now, always make sure that whenever you're trading, you know where the inducement is. If you can't see the inducement, you are probably going to be the inducement. Have a great week.